All right, now what's happening in the energy market? Well, one side there is a spike in crude prices. On the other side, there seems to be an indication that production cut by key nations are here and they are here to stay. Now, while government currently is cognizant of the fact that they need to really get a lot of taxes from the fuel retailing business, is this a good idea to have such high fuel prices when the economy itself is struggling to come back? Because the minute the government reduces duties on fuel retail, that automatically means that there is going to be more money in the hand of consumer, which indirectly will come back to the economy. So to discuss all that and much more, we have with us Mr. Surana to talk about where things are moving for the energy sector and for the refining sector. Mr. Surana, good morning. Thank you for joining us. Always good to have you back. I'm going to start with a very basic and a macro question, which in a sense is an indicator of where the economy is headed. When we spoke last, you were reasonably confident that the diesel demand was back and the diesel demand is here to stay. Now that almost all parts of the economy have normalized, where is that data? How exactly is the diesel demand moving?
Good morning, Nikunj. If we see April to December month data, so we are at around 89% of the same period last year. So April to December demand is around 11.8% lower than what we had last year. If we see petrol, it is also almost a similar thing, around 12% lesser than the last year. Now, if the growth we see, it is in the December month, we had the positive growth on petrol and slightly a shade lower than the last December in diesel. LPG had been positive, ATF is still to pick up, and the overall, if you really see on the bottom line basis, so we are slightly positive compared to what we were last year. As far as industrial goods are concerned, that is also around the same 12.5% lesser than April to December last year. So overall, we can say that we are around 89 to 90% of the 3 quarters demand last year. Now, this is on the back of the fact that the first 2 quarters were quite low. So to that extent, I must say, and I repeat again, that the Q3 recovery was good. Now, I said probably last time also that the further demand of the diesel, the one of the trigger would be the harvesting season, which will come, and that should bring in some fresh demand in diesel. And the further part of it is the industrial pickup, which is happening, may not be to 100% extent, but it is. And the construction sector, which is also picked up, with some hesitancy here and there, depending on some of the COVID regulations which the people have to follow. But otherwise, I think that compared to where we were in the first quarter of this year, I think we are much better off with a lot of hopes coming in with the vaccine. Now the inoculation already starting. Just 2 days back, and we hope that the thing should be getting normalized sooner than what we thought earlier.
Mr. Surana, I go back to a point which is perhaps more like a ideological debate, that should India have such high excise duty or excise duty rates on fuel retailing? We have one of the highest rates in India. There is a compulsion that the government needs to, they need to meet their revenue deficit targets. But this kind of a high excise duty is something which in a sense is going to be A, hurting demand, and B, it will also in a sense not right that Indian consumers should be paying that much when global commodity prices have been lower.
So that is a debatable question. And as a consumer, people would like to have the prices as low as possible. But one thing I want to point out that it is not that there are there are other countries also where the taxation rates are in the range of 60% plus. So right now in our country, if we put together central and the state taxes, it comes to around 70% of the total price which a consumer pays. Now, whether it should be high or it should be low, one debate can be that if the prices are low, probably the inflation rates may be low and there is more money in the hands of the people. So there is better for the economy. There can be another way to look at it is that the government needs the resources to provide the stimulus, and especially in the time like this where the private sector inputs may be limited by their own constraints, and if the government has to put the some of the money in the social welfare of the people, then they need the resources. So as you rightly said, it is a debatable question, and the government is the best judge to decide that at what point of time which will be best suited. Now, if we see the overall kitty of the government, government can take it in form of a direct taxes or indirect taxes. So more money in the hands of the people. If it leads to higher rate of income tax, then again it is the same debate will start that whether it's good to have higher income tax or not. So in the country, we had once upon a time a very high rate of income tax also. So there was also a debatable question.
Mr. Surana, there are two big changes which have happened, which I'm surprised why markets are not talking about it. When I say markets, stock markets. One, you've raised fresh debt which is below the RBI bond. That is an endorsement of the faith people have in a sovereign-backed company. Second, the buyback. Now, in both
Nikhil,
these
can you
cases,
just repeat that? I didn't hear the first part. Can you just repeat, please? Nikhil, just can you repeat, please? I didn't get the thing.
No, I'm saying that there are... Sure, no problem. Yeah. Okay, there are two things which have happened, Mr. Surana, which frankly nobody in the market is talking about it extensively. There has been a mention of it, but there has been no large follow-up debates or discussions. One, your cost of borrowing today is below RBI bond. Second, the buyback which you've done at a premium when you announce the buyback is will significantly boost your EPS. Could you walk us through the benefits of how buyback, which will reduce your equity, and because you're borrowing at a rate which is lower than RBI bond rate, how will this reduce your interest cost, which in a sense will add up to your profitability?
That's a very interesting question, Nikunj. I must compliment you for that. So when we announced the buyback at the time also, I have said that the buyback will extinguish some part of the equity, and the cost of servicing equity, especially with very high rate of dividends, is high. Especially at a time when the interest rates are lower, the borrowing is a lot cheaper compared to equity. Now, you can give or benefit an investor either by having a larger pie of the total profitability of the company, whether it is in the form of the dividend or in the form of the plowback of the money in the interest of the company itself. Either way, ultimately it is the shareholders' money. So right now, you are absolutely right that the borrowing cost is very, very good. And for a company like us with good credibility in the market, we are in a position to leverage that. And that was the reason and very premise for announcing the buyback. And so I should say that while the profitability will get held by the lower cost of borrowing, especially when we had the high capex cycle, at the same time, the distributable money in the hands of the individual shareholder will improve. I should say that. Even with the same profitability, with a lesser number of shareholders, the per shareholder distributable money improves. So that is the benefit which the company has. And we have seen the market recognizing this, that from the time which we announced the buyback to the uptick which the share prices get. Of course, the share prices are also a function of many more factors in the market, and market is the best just to do that. But I seen that there is a general uptrend in almost all the PSU shares and HPCL shares after that. So we are happy about it.
Sure. Mr. Surana, could you put some numbers to that? Because after the successful buyback, brokerages in the street is working with an overall earnings uptick of about almost 70% in the next 3 years. Is that a possibility, you think?
Because the quarter is ended and we have to announce the results soon. So I think I have to refrain myself from commenting specifically to that question.
Not a worry. When we chat with you after your earnings, I'll bring up the question again.
Yeah, I think that will be the better time to talk about.
Recently the BP... Okay, we're booking you then for our next appointment. Mr. Surana, the BP CEO Bernard Looney, recently made a remark that India is going to remain the fastest growing fuel retail market in the world for at least 20 more years. How does the runway for growth look to you when it comes to fuel retailing, part of which is your mainstay?
So India, if the last decade or so, we had grown around 4 to 5% on an overall basis, where some products grew faster and some products grew at a lesser rate. But it has been in the range of 4.5 to 5%, somewhere in that range in last decade, if we see the CAGR rate. And I will agree with that with the demand which the country has and the demography which we have, there is no denial of the fact that India will be one of the fastest growing fuel retailing market in the coming decades. And that is the reason that everybody, I think almost there is unanimity that India will be the third largest consumer of the energy. And that is backed by the demography, the development, and the pace of the development is coming. And so I would probably tend to agree with that. Now, a part of that growing demand may be serviced by some of the newer source of energies, but irrespective of that, the fuel demand will continue to be there. And the fuels itself, the conventional fuel that itself has evolved over a period of time in terms of its quality, in terms of its environmental impact. So I think the fossil fuels will become more and more cleaner, and they will continue to occupy a substantial and prominent place in the total energy basket. And some other fuels will be able to cater to a part of the growing demand. That's the way it appears.
Sure. They also say, Mr. Surana, your retail outlets are more profitable versus others because of the higher share of lubricant sales. What's the kind of the degree of superior profitability in general, if you can share any light on that?
Lube is one of the important businesses as far as HPCL is concerned, and I think you may be aware that we are the number one marketeer of lubes in the country, and also we are the largest producers of base oil, lube base oils also in the country. And we have got a business model where it is slightly different from the other industry colleagues of ours. And therefore, the lube remains a part of rather one of the important profitable business of the whole basket. And it will continue to be so with more and more fuel sales and the varied type of lubricants which we have put in the market. And we had been consistently working. Earlier, we also used to sell base oils. But over a period, we had been working consistently to convert as much of his base oil to the value-added lubes. And that is where we have also expanded our horizon in the sense that we are currently exporting lubricating oils to around 14 countries. And at least among the PSUs, we were the largest exporter of lube oils recently. So lubricant business will continue to be one of the important part. As far as profitability share is concerned, we have got a SBU concept where each SBU has got a responsibility for the profitability of their own sector, where lube is a separate SBU and retail is a separate SBU. But yes, retail has got a share and profit share of that.
All right. Thanks for joining us, Mr. Surana. Good having you with us this morning.
Thank
We're
you
going to
so
take a
much.
quick break. Back in just a moment.